So in the world, one can only invest in four categories of the investment. One is equity, second is debt, third is hybrid, and fourth is real asset allocation. Real asset allocation. So whenever you decide the investment, it is going to qualify in one of them. Actually, vehicle could be anything. I'm telling you. Okay. When it comes to equity-based investment, so now somebody wants to do equity-based investment in any of the country. Okay. The most easiest option you can invest would be buy that country index fund. That's it. Kuch nahi karna. That is the most easiest. For that, neither you need advisor, nor you need any expertise in that, and neither you need any tracking and all. It is going to be autopilot. Okay. So how the index fund delivers returns in any of the economy? So very simple. You need to ask yourself before investing in equity, what is going to be a GDP growth of that particular country? So for example, we are talking about India. So if I ask anybody, what do you think, what could be the GDP growth for next 10 years in our country? Anybody, any random guess?
7%.
7%, right, sir? Okay. And what is going to be an inflation rate, mota in next 10 years?
Definitely 6%.
6%. Okay. So whenever you are investing in equity, okay, these are the two components which help you to estimate the possibility of the growth you can draw from the equity-based investment from the index. So it means that India GDP on a nominal basis will gonna grow at 13%. So it is nothing but a returns of the index fund. So index fund nothing but generate a plus minus 1-2% against the nominal rate of the growth of that particular economy. Now let's look at some of the examples so that we can able to validate. The US GDP does not grow more than 3 to 4%. Okay, let's take 3%. Similarly, the inflation is also around the 3%. अभी थोड़ा बड़ा हुआ है, but leave it. Long term is 3%. So you club that 6% is the total nominal GDP growth they have. So if you look at their S&P 500 return of last 20 years now, it is around 6-7% only. 7% is the S&P 500 return of last 20 years. Let's look at Japan. Japan is growing at minus 0.50 year on year basis. And they have a deflation. They don't have an inflation. They have a deflation. 0.10 approximately. So technically their returns is around minus 0.60. Okay, ये minus नहीं होगा. Minus 0.60. And that perhaps the reason in last 34 years, Japan market has delivered 0% return. The last time it was high in 1974. So the same logic apply for the Europe also, China also. So it's a basic concept of the economics. Okay. So before you investing in equity, you should be asked yourself whether that GDP has a positive growth or not. If they have a GDP positive growth, then definitely that would be the return expectation you can have. Now, you decided not to invest in index fund. आपने बोला हम तो mutual fund में, active fund में करेंगे. Mutual fund. What I can buy direct stocks. I can invest in PMS. I can invest in AIF, for example, alternative investment fund is a little larger, the portfolio. Or I can invest in private equity. Or I can invest in insurance-based investment equity. Maybe I'm talking about ULIP and all. Now, how will I decide whether I should be investing in this or I should be investing in index fund? So very simple mathematics, I'm going to give it to you to understand how any advisor and wealth manager think. Here, very simple philosophy to evaluate. We say, okay, this is risk and this is return. So his area of thinking is very simple. My index takes X risk to deliver Y return. Okay. If I am not investing in index and investing in something else, so either it should take X minus 1 risk to deliver Y return, या तो risk कम ले same return deliver करने के, or it should take X plus 1 risk to deliver Y plus 1 return, then also it has a motivation. Or the most optimized would be it takes X minus 1 risk to deliver Y plus 1 return. So anything which you are deciding in your life, my feeling is that it should be qualified in any of these three. Okay. And the 70% portfolio should qualify in this end. That should be the objective of any advisor or anybody I am hiring beyond the index allocation. Similarly, in debt, what is the most easiest option I can do? I can go and buy fixed deposit. Okay. A fixed deposit is an excellent investment. No problem with that. The only challenge is if I'm getting 8% return and if I'm qualifying in 30% tax bracket. So my return would be 5.6%. Okay. If I'm qualifying in 0% tax bracket, then return is not an issue. So my most easiest option would be investing in FD, paying tax, whatever I left with, that would become a net return. If I have to take a choice between not investing in FD and allocating some money somewhere else, so my only line item would be again, same thing. Okay. I can invest in arbitrage fund, which is the safest option. I can invest in debt mutual fund. I can invest in any bond. I can invest in any different allocation like P2P as becoming popular these days. Okay. Or if anything will come up, then gold link, Nifty link, something like that. That's a complex product. What would be my only motivation to investing in any of the category? On a safety or return perspective, it should at least beat this 5.60. If it is not beating this 5.60, there is no motivation to investing in any other category. I should continue with the same thing. Okay. Similarly, hybrid. What is hybrid? Hybrid is, as we understand, mix of 2 or 3 things. A fund which has a equity, which has a debt, which has a gold, which has a silver. So combination of any 2 or more things can convert it into a hybrid. Okay. Now the choice would be how I should be deciding it. So think of it, I have no money to invest long term and my goal is also not short term, something in between. Then hybrid trigger into the picture. Timeline will understand. And the last would be the real estate, basically real asset allocation and the gold. These are the only component which I have. In India, somehow the residential real estate could not able to do similar kind of surprises what we see in international level, mainly because of the high interest rate and lower rental yields. Otherwise, real estate classified to be the second best investment in the world, be it US and Europe, because the average rental yield would be around 6%. मतलब क्या हुआ कि अगर आप 1 करोड़ का घर लेते हैं, the rentals in Europe, US, Australia, Dubai, such kind of countries is around 6 lakh rupees. Against their interest rate is 2-3%. In India, unfortunately, because of the lack of regulation, transparency, this is getting evolved over a period of time. The rental yield is only 2-3% and the interest rate is around 8-9%. So that leads a lot of challenges in our country. Anyways, but world it is classified to be as one of the best, second best investment after the equity. So that is why in real estate in India, we say you should have a house, but you should not look for larger investment for an investment perspective in the real estate until unless it is a high-end commercial or anything which can command a better rental yield for you. That's a separate discussion of it. Okay. Now the query comes, how will I decide where I should be investing? So we understood the goal. So you may have a goals of this way. Goals. Less than 1 year, less than 3 years, less than 5 years, less than 7 years, and more than 7 years. So this goal planning actually help you to understand where you should be allocating your energy and money to make your returns better and optimize the overall value. Okay. So any goals which are qualifying in these time horizons should be in debt. Means less than 1 year money and less than 3 year money should be in debt. No compromise on this stage. Okay. Any money which is less than 5 year and less than 7 year should be in hybrid category. Okay. The money which I need more than 7 years or 10 years should be in equity.